We've seen interest rates climb significantly since the beginning of this year, and everybody's asking me, John, when are interest rates going to stop rising? Well, I'll tell you what, the last couple of weeks have shown we might have already seen the highest rates. Now, I can't promise you what's going to happen, but as you've been listening to me over the last few months, I've been telling you the Federal Reserve raising short-term interest rates is a good thing because it's supposed to stop inflation. Inflation is what's driving up mortgage rates. Well, we have another piece of this that's coming into play, and that's what's going on in the stock market. The stock market has had some major declines recently, and that has translated into a decrease in mortgage rates or a relaxing in long-term interest rates. And that is a really, really good sign. Obviously, the inflation reports just came out. They were right in line with where we thought they were going to be. So that's another good sign that we may, in fact, be getting inflation under control. But we're not so sure yet exactly what's going to happen. But I do want to show you what this chart looks like. So I'm going to show you a chart right now that is going to give you a breakdown of kind of what we've seen in the 10-year Treasury. So now that you can see this chart, what you're looking at on the far right side, this is where we are today. We're at 2.74% for the 10-year Treasury as of today, May 27th. Now I'm going to go way back to March of 2021. We were at 1.5% in March of 2021. It actually fell to as low as 1.175%. This is the 10-year Treasury note. The 10-year Treasury is a bond that the federal government sells that if you buy an investment in that, then you get paid this interest rate for the next 10 years, and then you get your money back in 10 years. It is a common substitute for mortgages because mortgages don't last 30 years. People refinance the mortgage in anywhere from 5 to 10 years. So it's a good benchmark to say mortgages are similar to the 10-year Treasury, with the exception of the fact that 10-year Treasury is safer and pays a lower interest. Mortgages aren't as safe, and therefore they should pay a higher interest. What we've seen is starting in January of this year, that rate went up and up and up. We saw a bit of a reprieve at the end of February, early March. So we saw a little bit of a downfall, and then it immediately started climbing again, a little bit of a drop, and then climbed again. And we hit the peak of 3.13% on May 6th. But we've had a pretty steep stock market slide, and some of that money was moved into mortgages. That has helped to bring this number down, and we've seen a pretty decent drop. Now, I don't think we're going back down a lot, but I think this gives us a lot of room that we're going to end up being somewhere within this range. Bottom line of what I want you to understand is that mortgage rates trade very similar to how 10-year Treasury trades. And I think that unless we get any scary numbers that are outside of what our expectations are, this mid 5% range, I think we might see a high watermark right here. I think there's a good chance that we're not going to go significantly higher in interest rates unless inflation goes significantly out of control or if we have a major stock rally. Be careful, because I said that the stock market's drop helped lower mortgage rates. If the stock market skyrockets, then mortgage rates typically are going to go up because people take their money out of the bond market and buy stocks. And therefore, to attract money back to the bond market, we have to raise the rate we pay them. Bottom line is, guys, it's still a super, super volatile time, but I do see a silver lining. And I think there's a really good chance in this chart that we're seeing that we might have actually just seen the high water mark of where interest rates are going to go. And I'm hopeful that as we go through summer, we're going to stay in the mid 5% range like we are right now and not see rates go significantly higher. By the way, to be clear, mid 5% range is just the benchmark starting rate. There are times based on your circumstances that you might be at 6.5%. There is a video that I just did about how interest rates are determined and all the different factors that go into it. So check out that video down below as well. And it'll give you really good information about how interest rates come together and what your rate will be when you go to get a mortgage. Thanks and have an amazing day. Make sure to like, subscribe, and share, and we'll talk to you soon.